Hello, everybody. Welcome to my new trade recap of last week. So let's start. I took two trades and I missed also two trades. One I took on demo, so this was also a missed trade, but I need to backtest that one I took on demo still. So yeah, the first one, EURCHF. What I can see on the weekly, we can see we came here, we had here a low, we created a new high. This is our low, new higher high. So we made here that bullish M, as you can see. After that pattern bullish M that we received, after that third leg, so this is the first, second, third leg, we received some corrective nature counter to the trend. So from now on, or from last week, I'm also trading with that corrective nature against the trend. So the trend is bullish, and we can still trade this. You can see here this bearish W. You could trade here these highs. As you can see, you could trade here the highs. So you could take here two trades to the downside. So till the weekly lows, or till that new weekly reverse point where the price can take some liquidity. So what I can see, I wanted also to trade against that corrective nature with a weekly bullish driver. So what I saw was I wanted to trade with that weekly low here. So we touched the weekly low. So we had here a weekly zone. And yeah, we had here already a weekly bullish candle close. So this was an indication for me, okay, we could go to the upside. And I saw here some bullish momentum kicking in and some nice supply and demand on here acting as resistance. Then here support. If I look further back, you had here a very nice support region that took a lot of buyers. And yeah, we stopped just here. And so that was a very nice sign. So nothing that much further to see back in history. But so this was the weekly, and I thought, okay, we can trade also the buys against weekly corrections with the weekly driver. I didn't yet test that, so I need to do that also. What the accuracy is there and what I can gain on that things. So I went to the daily, and what I saw on the daily, you can see already on the daily, this was our daily low, and this is our new daily high. So this is one leg, and the rest of it is corrective nature. You can see it on the weekly, it was clear, and on the daily, you can see the price is moving between these highs and lows. So its correction is very corrective. So what I saw then on the daily, so I saw a daily inverted and shoulders against the daily trend, or with the daily trend against the daily correction. As you can see, if you can see it, this as high, new low, high potential, new low here. This can be also possible, but we are still bullish on the daily here, low, high. So I see this an inverted and shoulders with the daily trend, with here that buying zone tapping. So very nice daily low. So I saw here this nice shoulder one, head, shoulder two with nice resistance in the head with a pattern within a pattern. So our first pattern, the biggest one, is shoulder one, head, shoulder two. And then we have a smaller one, the bullish M, first leg, second leg, third leg, fourth leg, as you can see. If I go on the line chart, you can see it more clearer. I will delete it like this, shoulder one, head, shoulder two, and then this bullish M, a pattern within a pattern to potentially play out. So this was increasing our chance to go to the upside. But like I said, I didn't test this strategy yet. So I was just implementing it because I thought, okay, it could be normal. Weekly lows, we could trade this. We had a daily pattern. Daily is bullish. But yeah, I need to test it. So I had here a loss on because on the 4 hour, yeah, we had then deceleration. And on the 4 hour, we were also indicational bearish because we were making here this low, high, low, higher high. Then we broke it here. This is on your low. So this is one impulse, one leg. And yeah, we were trading between these highs and lows. And yeah, we went to the downside because the 4 hour was indicational bearish. And why we went back to the downside. So guess which thing we tapped there, the weekly low. So we took some liquidity there. So yeah, we could. So this trade from this weekly highs, you could sell here till the weekly lows here, or here you could take profits, or here. So that's why weekly corrections can go a lot of times much further to the downside till that weekly low, as you can see, even 2 times, maybe 3 times, take more liquidity to the downside, because we already took here on that weekly reverse point some liquidity a little bit lower, so this can be a sign for more upside momentum. But then we went till the weekly high, so then we can short again till the weekly lows, and then I thought we could go and buy. So yeah, but I will test this, so no problem for that. So this diesel didn't play out, but yeah, we went just to the weekly lows to grab some newer liquidity, and it took it from there to make that potential shoulder one, head shoulder two here on the 4 hour, coming corrective, and then back to the upside. This is a high potential thing that can happen. So then the second trade, AUDCAD, I will go on the weekly. So what you can see on the weekly, we are bearish because we were here making this low higher high. We broke it. We had an indication on the low. So these are indication on the low, high, lower low, high, lower low, high, lower low. So everything between this high and low can be a correction for potential more downside momentum. So what we saw, we closed here and we came back till this first support point here, which acted now as resistance. So this is our first point of structure that could hold the price down. That's why we went back to the downside, to the weekly lows. So we went back to the downside till these weekly lows. And what we then had, we had here our bigger bearish W with that same lows. So we expect the same highs. So we tapped again the weekly highs. As you can see, with that first point of structure, support here, resistance. It's not the clearest drawing, but you must see it like this. So we had our bearish W. So this is our bearish W, like this. Then we came back. We came back to the first point of structure on the weekly. We acted as this was support. This can act like resistance. We did that, and we went back to the weekly lows. So we can make, we made the new double bottom. So we made a double bottom, so same lows. So we expect same highs, and then we can go back to the weekly highs, and which it did. We went back to the weekly highs, still again that supply and demand support resistance here, and then we can potentially go more back to the downside to go further in that downtrend, as I can see. So that's why I was looking at it. It was looking very nice, so I went to the daily, and what I saw on the daily, we had here our high, and this is our new low. This is just going over into each other, so I see this as one leg because the weeks go over into each other. So this is one impulse for me. So this is our high, this is our new low, and what we received there, we received some correction here, bam, and we're until the downside again. So kind of fake out flag, you can see high, low, new high, and then we went back to the downside. So what I can see, we tapped the same lows. So we made a double bottom. So we expect in a bearish trend from a double bottom as the weekly, the same high. So we expected the price to come aggressively to the upside, to the same highs, to the daily same highs there. And then I want to see a pattern. So on the 4 hour, what I can see, so I will like this. I had two possible entries. The first one was on the diesel here. We had here our first candle, second candle. So the first candle here, second candle here, third candle here. It's closed red, so I could take my limit after that close of that red candle. So on the fourth one, I could enter here. And yeah, I was at work, and yeah, I must do a lot of things. I must help them, the colleagues, and yeah, I just needed to help them. So it was not that good time to look at the markets. So it was it was a busy day, I must say. So that's why I missed it. And yeah, that's a shame because normally I would look at it. So yeah, nothing to do about it. And then I entered the scaling. So okay, I wasn't in it, but I entered the scaling, the bearish W here. So the bearish W. And I wanted to enter in between this IC here, like this. So the bearish W was in 61.80. So I wanted to tap on this middle of the IC to be safe that I was tapped in, because sometimes it's not tapping this high of that IC. So I will delete this diesel entry, so like this. And yeah, I just wanted to enter at the IC in the middle, so I was in, and then the trade went to the upside and I had a loss. But I saw then on the daily, if I go to my daily -27 here, then I had around, yeah, 9.67. So this was a lot, but yeah, with the bearish W, we don't need to have such big stop losses. So I was starting, okay, I thought in myself, so yeah, 9.6, okay, it's enough space to go back to the downside, but yeah, normally my max is 7%, so if I would do 7%, then it was just around the -1%. So yeah, it's a shame. I just did it good, but yeah, sometimes it happens. But stop loss could be better, of course. So that's why we had a -1%. So I had a -2% that week. So then the missed trade and the DGPY. So this is a new strategy I'm going to implement. When, I don't know, I need to have some more confirmation about it, but I'm testing it, and this could be a potential missed trade. So on the weekly, what can you see? We were here, these lows, and we made a new high, because this was our high, low, new higher high here. So this weekly low was still valid, and that's why we had here a false break of that weekly low. We just didn't broke under this weekly reverse point week, sorry. So we went back to the upside. We had some buyers. You can see every time we went at this zone, we had some buyers, liquidity spikes, came a little bit lower. So, and then I saw here potential, not the clearest one, shoulder one here had shoulder two, just to have some liquidity here, and it was taken. And yeah, we were still bullish, so I was looking for that bullish momentum till that weekly, till the weekly highs here. So till the weekly highs, or possible weekly reverse point here, because then the price can go to the downside, because it took some liquidity a little bit above that weekly high. So this is where the banks take the sellers, the buyers out, and do a lot of shorts. So that's why we had a lot of time, some liquidity under these weeks here, and then that's why we went to the upside, because the retail traders think we go to the downside, and then the banks go to the upside. It's a really nice game. So yeah, so I was going for that short, because first I was looking for that buy, but yeah, we had that reverse point. We had that week that came above that weekly high corrective nature here with that correction. So yeah, there was a sign that we could go to the downside from there to make here potential back a new low or take some lower liquidity. It can play out. That's too early to yeah, to say. But I went to the daily, and what I saw, yeah, the daily, we were still bearish, because we had here our high, and this was our new low here. So yeah, no, the daily was still bullish, sorry, because this was our daily low here. The wick didn't got broken here, and this is our new daily high. So we were still indication of bullish, and that's why we reversed from here, because we didn't broke this wick, and that's why we went back to the upside to the daily highs. And we went to the daily highs, weekly high, here, weekly reverse point, and then I wanted to see a pattern. So in this case, the pattern is after we had a wick above that weekly reverse point, and we went back to the downside. Then we must close under this first resistance structure. So we had our resistance, we went back up, we were making this bullish M, And then if we close below that first structure for our reverse point, then the first candle that is touching this black line, resistance point, then we want to sell. And then I want to see kind of 5%, 6% till the daily lows like this. And yeah, then we can take the trade, limit set, bam, price go a little bit up, corrective, and then we went to the downside for around 2 around 3%, and then we went break even. So I didn't took some partials there because there was no kind of structure to take some partial there. You could take your stop loss here a little bit above that lower high. This was possible, but yeah, it's not that much profits you could take out. So yeah, I was just waiting to go more to the downside, but this was a missed trade, and you can see it works. I have also already a backtesting file, and it works very nice. So then GBP-CHF, this one I took on demo because on EURCHF, it was also a kind of same thing to see. So what I can see, this is just a correction with the trend. So this is different from EURCHF. So what I saw was here we are still bearish because this is our high, this is our new low, this is our swing high low, this is our lower high here, and then we went to a lower low. Okay, so what I can see is we had here a very nice correction with the trend. It's kind of squeezing, almost squeezing it out. You can see it's getting smaller, smaller, and smaller. It's just like a flag formation, like you can see, it's like a flag. But yeah, it's just moving with a weekly trend. And what I saw was, and on EuroCHF I did it also, we are trading with the weekly trend, and we have a correction with the weekly trend. And what I saw was, okay, the price is having some difficulties to go more to the downside because the impulses are getting smaller, smaller, smaller. This can be that the price can break out to the downside because the buyers are getting out of the market, and we could go to the downside, or we can go also to the upside. So it's also possible. But the trend is bearish on the weekly. But we were at these weekly lows, and I thought, okay, I can trade weekly highs, weekly lows, weekly highs. Every time we are tapping a weekly high, weekly low in a correction, I can trade this because I want to take every opportunity the market can give me. So I want to a daily, and what I saw on a daily, weekly low was touched, and we made a formation, a daily inverse head and shoulders against the daily driver. Because the daily driver is, I think it was bearish. Daily driver is bearish because we have here this high, and this is our new low, and these wicks go over into each other. So this is one impulse low. So it's bearish, so it's an inverse head and shoulders against the daily trend. So we can trade this till the weekly high. We want to trade at weekly lows, and then we want to take the trade out at weekly high, and then we can trade again to the downside. That's a nice game to play there. So I can target then the daily -27 because this inverse head and shoulders is aligning with that weekly high. Very nice, actually. It's just perfectly at the weekly high. So then I went to the 4-hour, and what I saw, we touched the daily shoulder one zone, and we had a decel formation. We had here our first candle, second candle, third candle is closing back above. That's no problem because I can have one candle in between the decel, and then we must touch that fourth candle in that deceleration box, and then we could take the limit. I just placed a market order because I was at work and I saw this a little bit lower, and then I just placed it and it went to the upside. I took already some 1/3 out on my demo here for around 2.1%, and then I will be targeting the daily weekly highs, daily -27 for around 5%. So this was my weekly review from last week. I hope you liked it. I think 3 missed trades, and 2 trades that didn't play out, so that I was entered in, so -2% this week. So I hope you have a nice weekend and see you next week. Bye.